Alright, fellow freedom builders, welcome back to the channel here on a late Sunday evening here in Denmark, where I am sitting anyway. I just wanted to make a quick video here today because something a bit strange and extraordinary happened last week in the market, and I wanted to address it before the markets open today. And the thing is that oil has been dropping, and it has been dropping hard, and I wanted to address it because there are some underlying issues here that are important to understand if you want to understand the market. And I know you might be thinking, well, I'm not trading oil, so what's in it for me? Why should I see a video about that? Well, this has everything to do with the stock market and the overall economy, and if we're going into a recession and so on. So I suggest that you see this video through right to the end, and I will be giving you some small hints as to what I am looking for, both in the stock market, specific stocks and so on, and also if you're trading the oil. So let's get to it. First of all, if you are new here and haven't subscribed to the channel, please do so. It has been an extremely quick growth we've had in this channel, and I hope to be able to keep that growth up and running. So please subscribe, hit the like button, all that down there. You know the drill, and then let's get to it. Very well, let's look at a chart first. This is the WTI, the West Texas oil, which is one of the major oil indices or oil markets that you can look at. There's also another one. The price is not exactly the same, but that is the Brent crude. The difference is mainly where in the world they are produced. The Brent crude price is derived from the price from the North Sea here, just west of Denmark, and east of UK, whereas the WTI is mainly, or it is the price from the States. So there's also a Middle Eastern oil price, but let's just stick to this one. The principles are pretty much the same. What I usually tell my followers and my subscribers is that when we look at the oil price, we can pretty much detect what mood the economy, the overall economy, is in. So that, for instance, here in the beginning of the year, we were still actually seeing quite a good up spike in the stock market, but we had a trend that was broken here on the daily chart. We broke down, we went up, had a little kiss goodbye, and went down again. And I wrote and said in the videos to my subscribers that this could show us a bit of a hard time in the following month, or at least it could be some sort of leading indicators that there were troubles ahead. And boy, were there trouble ahead. As you can see, we have been seeing this zigzag trend downwards. And just Friday, we saw a drop in price of almost 10%. I haven't checked it exactly, but I'm pretty sure that the last time we saw a one-day drop of that magnitude was in 2008. I actually can recall having seen such a large drop before. That is completely unheard of. But there were several reasons why, and this is what I want to go into in this video. To understand what drives the oil price, there are several different factors. Of course, it is the normal supply and demand, so that if the world is demanding a lot of oil, that can be in an economic upturn where business is good and a lot of commodities is requested, and Europe and United States, they want to buy some goods from China, and they have to be sailed and flown in and so on. We need a lot of oil also in the production process. So that is great. There's a big supply and the demand is not really there. There's a big demand, but the supply maybe not. Maybe it can't follow the demand. So that makes the price go up, of course. So when we see the oil price dropping, it could be that either there is too big a supply or there is too little a demand. And what we have seen in the last month here, of course, and that is, of course, due to the situation started in China, and now spreading out to the rest of the world is that, point one, we saw a drop in supply of goods, meaning that nothing was really coming out of China. So the stores, the companies in Europe and the rest of the world, they had a hard time to get their hands on of the stuff they needed. So that was one thing. Nothing was sailed out from China. Now maybe China is getting on its feet again, but now the situation has spread, and now there is a lack of demand. Not directly for oil, but of course from products or for products, meaning that the populations, if they are quarantined and so on all over the world right now, or may be scared of going out to theaters and cafes and so on, so they are asking for less and less goods. So less and less is transported out of China and from the rest of the world as well. So that, of course, puts some pressure on the oil price. No doubt about that. But there are some other issues that we should also be looking at, because we have something called the OPEC, and you probably know it, but the OPEC stands for, here we have it, the Organization of the Petroleum Exporting Countries. And that, now this is in Danish, but that is 14 countries, and they are also having something called the OPEC Plus, where a lot of the other countries are including, and in here as well, Russia, which is not, you can see the map here, you can see the OPEC countries here, and Russia is not in there, United States is not in there, but the OPEC Plus has several other countries as well. OPEC was designed to be able to control the production of oil, so that if the prices dropped, then they could tighten the production a bit, meaning they could produce less. That would drive the prices up, and the oil producing countries could earn more. And of course, in times, if the prices got really high and it was slowing the overall world economic down, they might produce a bit more to push the prices down. So that has actually worked quite well for 35 years, but there is some breaking up right now. And one of the issues here is Russia, because OPEC met here the other day and tried to agree on some sort of halt to the production of oil, so that they could press up the oil prices. And I'll get back to that, to why in a second. But here, at least until now, Russia has simply declined to do so. They are not in the deal, and the question is now if all the other members of OPEC or OPEC Plus, if they can agree on reducing the oil production to put some upwards pressure on the oil price without having Russia in the game. Because of course, when they do so, they are producing less oil, meaning that they have less to sell. So the prices go up, but the OPEC are not selling so much. But if Russia is out of the deal, well, then they can have the higher prices, but they can still produce just as much or even more as it did before. So it is a bit of the musketeer oath that is falling apart as we see it here. I found an article here, Putin dumps MBS to start a war on America's shale oil industry. And that is because United States have put they have made some trouble for OPEC in the last years, because they have started to produce some quite cheap shale oil, and they have flooded the market in this oil, meaning that OPEC has become a lot less powerful. And today, as far as I recall, United States is actually an oil exporting country, meaning that they are producing more oil than they are actually using. So that is Putin. He wants the price to go lower on oil so that he can really bring this shale oil industry to its knees. So now, why is this a problem? Well, many countries that produces oil, let's just find a good graph for it here. Here it is, have something called the fiscal break-even oil price. Of course, there is an oil price, and I think we have it down here. There is what is called the marginal production cost, meaning how much does it actually cost to get a hold of 1 barrel of oil anywhere in the world. For instance, in Saudi Arabia, on their onshore production, they have a marginal production cost of only $3 per barrel of oil. That does not take into account all the investments that have been put into it. So the real cost is actually higher. But when they are looking at could we produce more oil, if they can get, let's say, $40 per barrel, well, then on that single barrel of oil, they're making $37 right here, right now. But of course, there is a lot of cost for equipment and development and searching for new oil, and that is not included in this price. But if you look up here, Russia, they can actually, on their onshore production, they can actually take $18 plus some transportation costs, so that is $30. Their Arctic oil is crazy expensive to get a hold on. So that is several years ago since that has been a lucrative business. As you can see here in Europe, well, we are under pressure because when the price of oil is down to $40-45 per barrel, then most producers in Europe are losing money. So are they in Canada, in Brazil, in United States, and that is the normal oil here. That shale oil production price has actually gone a bit down. This is the cost of 2014, and I know that a lot of these countries have been trying to get these prices to get them lower. But as you can see, there are some countries that are still making quite a lot of money for each barrel. But that is not all they're looking at. What they're looking at is that a lot of these countries have put this the income from the oil, they have calculated that into their normal revenue streams and have what is called a fiscal break-even, meaning the oil price at which the fiscal balance is zero. So if they want to have a good fiscal numbers from the for the country, they need a high oil price, because they are taking this money and they are putting them into the day-to-day business of running this country. And if they don't get enough money for their oil, then they have a big black hole in their income stream. And as you can see here, we can see the 13, this is 13 of OPEC countries here. We can see Iran, they need an oil price at $194 before they are actually breaking even on their budgets. Algeria, 109, and so on and so forth, down to Qatar, and this is in 2020. Qatar, they have $45, so that is barely breaking even. But let's see, Saudi Arabia, they need more than $80 per barrel to break even. And we are not anywhere close to that right now. If we go back to the charts, on the WTI, we ended the day Friday at $41.50, and here on the Brent crude it was 45. I'm not 100% certain which one of the two prices we need here, but it's pretty much doesn't matter because all of these countries are underwater. So what happens when they need money in their country's budget? Well, as long as, for instance, Saudi Arabia, if we're looking at the numbers down here, as long as Saudi Arabia can produce 1 barrel of oil for $3 plus 2 in transportation, that's $5, and they are a bit short-sighted, so they're not thinking of putting money into new oil ventures, searching for new oil, producing new oil fields, well, then they can actually for a short while live with the current price. But it is burning a hole in their country's budgets. So therefore, a lot of these countries, if OPEC is falling apart, and I must say that it kind of smells a bit like the good OPEC here is actually kind of, or at least there are some cracks here, that's for sure. And if they cannot hold the OPEC as a collective group, well, then all of these countries that is missing money in their budgets, they will start producing more and selling at discounts, and they will start to underbid each other on the oil market, and they will not go out as one unit and saying, hey, we are the leaders of the oil market. They will no longer be able to do that. Many experts say that it's actually a number of years since they have been able to do that. But for certain, right now, it is cracking up. And that could mean, especially now that that Russia declined to be a part of a deal where they cut the production in number of barrels to raise the price a bit, that could mean that the price of oil here over the next week can drop dramatically. And I mean, well, I'm not an expert on the oil market, but I could see a price, I don't know, $10 lower. If we end the price at a $32 mark, I would not be completely surprised, to be honest. So that is really giving a lot of trouble to a lot of countries. And of course, there are companies that are really severely hit by this. There is the large oil companies, of course. You can take the ExxonMobil, you can take several other companies, but there are a lot of other damages done as well. You could say that, for instance, the alternative energy sector, that could be wind turbines, that could be solar cells, and so on. All of a sudden, when some people want to build a park with wind turbines, for instance, they are looking at what price can we get for the electricity that we produce here. And when the oil prices are dropping, then that also puts a pressure on when a wind turbine is profitable. The same with solar cells or wave energy or nuclear power plants or whatever you can imagine that is producing alternative kinds of energy. They want actually the oil price to be very high, $100, $150, because then they can go out and say, hey, we can produce it cheaper with wind or solar or whatever. But if we get down to $30 or $40, a lot of these alternative kinds of powers, they have a hard time competing with the oil. You could also see entire markets go down with the oil price. For instance, you can take a look at now I'm sitting in Scandinavia here, so right next to Denmark we have Norway. And here in Norway, they have a huge amount of oil, and a large part of their industry is tied up on the oil industry. So if the oil is really collapsing this week, as I am a bit afraid of, then we might see the Norwegian index really dip far down. That could be 10, 12, maybe 15% worst case. Well, I'm not much into predictions, but I have seen this a few times in history where the floor is simply removed beneath the market, and of course it will come up again at some point. I'm not saying that Norway is going bankrupt or anything like this, but you should just be prepared at some extremely volatile markets in this week. Even if OPEC managed to pull themselves together and actually maybe get Russia in the game to get some sort of deal negotiated, and they are saying, hey, now we are reducing oil prices, then I have my doubt if that will be enough, because the things we see due to the China stuff coming and rolling out all over the world here is that the demand for goods and for oil is dropping extremely fast. So I have a feeling, and this is not I haven't been able to find a lot of data on it this weekend. But from what I can read from a lot of sources is that this is hitting the oil market hard, and several experts I have read are saying that the OPEC pretty much has nothing to do. They might be able to push the oil up a few dollars, but then it will start to drop again. So it'll not be. It's not before we see some serious drops in numbers of infected people all over the world that we can really start to see some bottom under the oil price. So you should be careful out there, and if you are sitting on stocks that are vulnerable to a dropping oil price, then you might consider if you should get out of them and see where this ends. But again, I'm not a financial advisor, so of course that should be entirely your decision. Of course, there are businesses that are thriving with a lower oil price, and that could be companies that are, of course, using a lot of oil. That could be transportation companies and so on that now have one of their large costs cut very much down due to the lower oil prices. The problem, of course, is that the reason for the oil to drop is that there's less demand for goods. So it doesn't really matter if a transportation company can get the oil cheaper if there are no goods to transport. And if we are looking at, let's see here, the Dow Jones, just a second. Yes, here it is, the Dow Jones Transportation Average Index. That is all of the companies that has something to do with transportation. We can see that that has been in free fall also over the entire 2020 actually. From the top up here, that is now down with 21%. And if we're looking at the theories from the old Dow theory, it actually said that when we saw the Dow Jones index making new lower bottoms, that should be confirmed by the Dow Jones Transportation Index. If it wasn't confirmed by the Transportation Index, it was not a real crash in the market. But if it was confirmed by the Transportation Index, then it was confirmed, because then it was not just the large companies dropping, but it was actually also showing that no one was sending any goods anymore. So I'm not sure if the transportation companies will really benefit from this lower oil price anyway soon, because they still need some goods to transport. And if, as we see in Italy, that they are quarantining 16 million people, well, these 16 million people will spend a ton less money on goods. And these goods, when they are not bought in the shops, they are not ordered from the companies. And when they're not ordered from the companies, then of course they're not transported anywhere. And that will lead to even more drops in oil price. So I will probably, for myself, be short oil this week if I can find some good points to get in at. When I am doing this, I am trading on a 4-hour chart. Let's just get back to WTI here. That is the primary instrument I'm trading here. So I got in a good trade here and took it all the way down. I didn't get in on the last drop here, but I will probably try to find some short trades, but it might be dropping so quickly that there's no way to get in on this market. And then I'll just let it run and find some other currency deals to trade instead, maybe gold. And I will probably be out of most of my stocks at the end of the week. I only have a few left, but I have a feeling that if it goes the direction I kind of fear, then I will get sell signals on most of the rest of my stocks, and I'll probably be almost 100% into cash on my stock portfolios when we get to the end of the week. But then again, I might be wrong and everything might turn out fantastic, and we might see vaccines and more demand and so on and so on. But I am a bit skeptical, and I really, really urge you to be careful out there. Watch out for your money. And if you should listen to a little recommendation from me here without giving any financial advice, I would say be careful with the buy on the dip philosophy that I know a lot of people have had great success with for the last 10 years. I am a bit, I'm a bit afraid that this is not a good buy, but it is more a goodbye. So I think the markets are going to drop more. I think the oil is going to drop more. And anyway, even though it is going up maybe a bit somewhere in this week, I will be sitting on the sideline and waiting for the right time to get in. During this week, I will make a video or two about what I scan for now, because when the market drops, I start to look for good candidates to buy. We should not just sit down in apathy here and be shell-shocked. We should start looking for good candidates. And there are some out there, and I'll show you exactly how I scan for them and when I plan to get in. So keep an eye on the new videos coming out this week. There will definitely be a lot of interesting stuff happening. All right, that's all for now. Take care of your money out there, my friends, and talk to you soon. Bye.